Yes, guys, the AMC Gamma Squeeze is still on the table. We are going to be going through the Stocko Tracker data as well as take a deep look into the option chain and where I do think these critical levels are that we will start to see a Gamma Squeeze, and exactly how the institutions and hedge funds that act as market makers start to actually delta hedge, and that is where they buy the shares to cover the call options that they are essentially selling you once you buy these call options. So we're going to go over a lot in this video. Let's get straight into it. Hit that like button, consider subscribing to the channel. Now, as we all do know, a brief just overview of the technical analysis. We are still up a lot, guys. We are still up over 1,000% for the year. So nevertheless, a great year for AMC. Overall, a great last month or so. But we are still in a bullish trajectory. We are still way higher than we even were at the start of June. June 1st and June 2nd were the major days AMC really did start to rally. And if some people are discouraged of the move we did see today, down about 4% if you include regular trading today and after hours, you really have to zoom out and take a look at the overall picture. And as we do know, AMC can move up a lot very fast. It can move down a lot very fast. So these are gonna happen. The most important thing here is that you hold the line and stay in your positions. Now, I'm not a financial advisor or a financial planner, but like I said, I'm going to be giving you guys my expectations of a possible Gamma Squeeze and what I do think is going to happen. That is not a price prediction, but simply when our most likely time frame is to actually see a Gamma Squeeze, which we do need to see a Gamma Squeeze and the shorts cover to go to these multi-$1,000 price points that people think are coming, that I quite frankly think is coming as well. Now, as we do know, also we still have 93.07 million shares that do need to be covered. These are legal shorted shares that need to be covered at 18.19% of the total free float. So that is a huge number of shares that do need to be covered. If you guys come back to the volume, and this should rest assure all your guys' minds out there if you are starting to doubt the whole movement. For today, we only had 62 million in volume. For the highest day during this squeeze, June 2nd, we had 757 million in volume. That is over a 10x decrease in volume, and we have only seen the stock move down marginally. So with a decrease in volume like this, you would expect to see the share price going down a lot more than 4% on any given day. So that is a sign that you can at least rest assured that apes are not selling out of their positions, the majority of shareholders. And I don't think you guys are as well. Let me know down below in the comment section if you guys have, if you are buying the dip, what you are doing with your AMC position, as well as what is your price that you are willing to sell out at. That is very important because I do think this is a self-fulfilling prophecy. If everybody were to hold to $1,000, then we would probably go to $1,000. If everybody were to hold to $10,000, we would probably go to $10,000, just because we own the majority of the float. And if we can collectively act as one unit, that's where we will get the most benefit and the most tendies printed from this short squeeze. But let's home back into the Stocko Tracker data as well as the option chain. Take a look at when we are most likely to actually see a Gamma Squeeze. And keep in mind, for this trading week, obviously we didn't trade Monday, which was quite disappointing. I don't like short weeks whatsoever. I like to trade in the markets, but for this Friday, we only have 16,632 options that are in the money, out the money at 175,356 options. So I don't think there's much chance for a potential Gamma Squeeze, at least going into this next Friday. Obviously, we always have this increase in open interest at the $60 strike. That is currently at 13,567. You actually see a decent amount of open interest throughout the rest of the strikes as well, in the couple $1,000 range. And obviously 145 always has the most open interest, and that is at 28,618. So most of these contracts will probably expire worthless, if I were to say, and that is a huge problem in and of itself. You guys should watch the other videos I've made about this, but we're essentially giving this money to hedge funds and institutions, and they're not having to delta hedge for these calls that they are selling you. So that is not a great thing. Like I said, not financial advice. Buy whatever you want to buy, but there's not too much of a chance to actually see a gamma squeeze here. And what really happens with a gamma squeeze, take for an example, if you are buying these $70 calls, you're buying these at this current price for $37. You agree to buy 100 shares at $70 per share. The market makers like Citadel, they are on the opposite end of this trade. So they are agreeing to sell you 100 shares at this strike price, so $70. Now, why would they buy AMC stock at $50? They wouldn't. That's where you start to see the share price go up, and that's where you see a lot of delta hedging going on, aka market makers buying shares to cover these call options that they did sell you. So the higher the share price does go, the more and the more open interest you do have in these contracts, the more the market makers like Citadel have to start buying the shares, helping the share price go up into an even bigger gamma squeeze, and then ultimately making the shorts be forced to cover their short positions. Now, going back to the Stonko Tracker data, I do personally think, and this is only my opinion, that July 16th expiration has the highest likelihood statistically. This is a proven fact. You cannot deny this. Things can move around a lot, right? But this, as far as we know right now, this is the most likely expiration week to see a gamma squeeze. And we're going to go in depth about the actual option chain, where we do stand. But we have 78,273 contracts that are currently in the money, 236,634 that are out the money. So huge numbers, guys. And all the rest of these expiration weeks don't even come close to the actual open interest that we do see on this next upcoming expiration week, which is July 16th. So I do think we have the best, most likely chance to actually see a gamma squeeze here, but this, like I was saying, this again, it is not a guaranteed to happen. This is only what I do think and what I do expect. Now, going back to the actual option chain for July 16th, let's take a look at this. And obviously we are going to have a lot of open interest at this $60 strike, and it's unclear if some hedge funds, institutions, or market makers did hedge some of these contracts, some of these calls that they did sell you when we were closer to about that $58 price. I do think some of these were hedged for, but definitely not ones that are getting purchased right now. So like we just talked about, when they are selling you these calls, they are agreeing to sell you 100 shares at, let's say, $60. Now, if the price gets close to $60, they have to come up with those 100 shares per contract that you guys bought and agree to sell them to you at $60. So that's where you're going to see a lot of buying going into the stock. Now, there's also things like Citadel. They have been fined for this in the past, not giving people the best execution on their order flows. And they do account for about 70 to 80% of trading in AMC, as well as other momentum stocks. So I do think we're seeing this strong resistance level at $60, not because apes are selling by any means necessary. I don't think in a large portion of apes, they are selling at about the $60 price. I don't think they're getting scared and paper handing. I do think Citadel is behind order flow manipulation, and they are tweaking the numbers of the order flows by even 1/10 of a penny. That would make a huge difference here. But our strength is in numbers. The amount of apes we have, the amount of capital that we all do possess, is where we can make the most of this situation. Now, actually, back to the option chain, we have 17,229 contracts that are in open interest for the $60 strike. So let's just assume half of these were hedged for. We could probably safely assume about 8,000 of these were not hedged for. So that is a significant amount of shares that would have to be bought right there at the $60 strike. But what is kind of alarming but kind of expected at the same time, in between 60 and 65, you don't see much activity at all. The highest open interest between 60 and 65 is 595 open interest for the $63 strike. So every about $5, at least on this option chain, you are seeing a high amount of open interest. At the $65 strike, at about 5,500 for open interest. Now, I don't think any of these were actually hedged for, and that is very important to understand what is going on here, how these market makers actually hedge for these options, and how you do get a gamma squeeze. So see, like I said, about 5,500 contracts that would need to be hedged for. That is a significant amount of shares. Now, obviously, in between 65 and 70, you see even less options activity than in between 60 and 65. But once you get to 70, you have 21,221 contracts that are currently in open interest in people's brokerage accounts. And none of these contracts, I would go as far as to say none of them have actually been hedged for on a large amount or at all been hedged for, because it comes down to market makers, hedge funds, institutions, whoever is on the back end of these calls, what their expectations are. Like I said, if you didn't think AMC was going to $70, why would you buy the shares at $50? You wouldn't do that. So if we can upset the market makers, specifically Citadel, because they are the largest one, as well as hedge funds and institutions, upset them and actually drive AMC's share price up, that's where you're going to see a lot of frantic buying going on from these market makers, because they don't want to lose on their short positions. Really, it's shorting these calls because you are buying the calls, but they don't want to lose on shorting you these calls. So I do think you're going to see frantic buying going in at that $60 price, as well as getting close to $65, and then ultimately over 70 is really where you start to see options activity really start to pick up in activity. Now, I do think over 70 as well, you're going to see a lot of these 93 million shorted shares actually starting to be covered as well. So I do think if we get over 70, that's going to be the critical level. That's going to be your make it or break it for the Gamma Squeeze if we do go up higher. And especially once you do get to that $70 price, by then you're going to see a lot of FOMO buyers coming in. You're going to see a lot of day traders coming in. You're even going to see a lot of hedge funds and institutions that are betting the stock is going to go up in the short term. That is going to help ultimately drive up the share price as well. Now, $71 and $72 strikes have like no activity on the option chain, but like I said, at 75 you see 16,627, at 80 you see almost 7,000, 85 you see 3,300, 90 you see 3,000, at 95 you see 1,600, and at 100 you see 32,393. Now, this is a huge amount of shares that would be hedged for. Quick math here, I think 32 million shares that would have to be bought, or 3.2 million shares. 3.2 million shares, I do believe. Nevertheless, that is a huge amount considering we own a majority of the float, and Apes would not be selling at this point. Now, if we do get over 145, that's where you get into GameStop like volume and momentum, right? We could see moves of $5 to $10 any given second, just like we were seeing at the peak with GameStop. I don't know if it'll get to this. I don't want to put a price prediction on this, but I do think $70 is not out of reach, right? I do think that is a strong possibility and probably likely, given we do have other catalysts that are coming out and essentially have came out. Like Adam Aron today, he says they are not issuing or gonna even let people vote to issue 25 million additional shares. That is a huge bullish catalyst, as well as we do have Black Widow hitting theaters this upcoming Friday, July 9th, which we will get those box office numbers for come Monday. So if the momentum changes with AMC stock, I do think $70 is definitely not out of the park. And then obviously after 70, you're going to see a lot of buying going in, and then that is ultimately up to Apes to see how high we want to drive the share price, because ultimately we are in the driver's seat here. We are in the ultimate control. Now, obviously, just acknowledging after July 16th, there's not any chance of seeing a Gamma Squeeze. July 23rd, expiration week, we only have about 53,000 in open interest put together within the money calls and out the money calls, and after that you go even less. At the August 6th, this actual expiration date just opened up. You see about 11,000. At August 13th, you see not even 1,000. At August 20th, that's going to be your best next chance. We're going to see this activity start to pick up the closer we do get to this. We are currently at 86,336 contracts that are out the money, and 42,029 that are currently in the money. So that's going to be your next best chance to actually see a Gamma Squeeze if it does not happen July 16th. And it is so important to see a Gamma Squeeze, like I said, because you need the Gamma Squeeze and the market makers actually buying these shares in a large amount, as well as that will force the shorts to cover. So that is all I do have for this video. That is everything you guys need to know as far as a potential Gamma Squeeze and what I do expect and why I do think a Gamma Squeeze is very much still on the table. Now, check out the links down below in the description. There is a link for public, no deposit necessary, no need to even link a bank account. You get your free stock in about 3 minutes time, and they do not route your order flows to companies like Citadel. They go straight to lit exchanges, so you guys are getting the best price and ultimately not feeding Citadel any more money, because that is important here. We have to starve Citadel. Now, I also do have a link for Webull. Deposit $100, get 4 free stocks, each of them potentially worth up to $2,400 a piece. And there's actually a setting in Webull. You can turn off the availability for Webull to lend your shares to other hedge funds or institutions without you knowing about it. So that's why I do have those 2 links. I highly recommend you guys check those out if you have not already. As well as if you guys want to start winning on your trades, check out the link for the buy and sell alerts. You'll be notified in real time every single time a trade is bought or sold in stocks, options, or crypto, whether that is a day trade, long-term investment, or a swing trade. Join a community of about 40 members strong that sources great information all day long, so check those links out. But that is going to do it for this video. I will see you guys in the next one.